Good morning, everyone. Microphone check, screen check. Looks like everything's working correctly here. Although I do have to say, my computer is running really poorly right now. What in the world is going on? This thing's running like crap. Hold on, I'm trying to figure out what in the world is happening. Super laggy. Wow. Alright, well, hopefully it'll work its way out, I guess. Funky. Alright, anyway. Welcome. If the stream just stops for some reason, that's probably why. My computer probably crashed. I don't know. I'm gonna have to probably give it a good old once over after the room's done. But before we jump in, of course, on the right side of the screen, like always, make sure to read through the live trade room morning prep PDF. Very important to go through and understand everything that is inside there. If you need to read through that with a little bit more time, obviously you can pause the video, but we show that every morning in the room there for you. So feel free to read through that. Just a quick note before we jump on in. Please keep in mind the YouTube broadcast does have between like a 5 and 30-second delay, depending on when you're logging in, where you're logging in from, rather. And that will definitely impact the timeliness of what I may be talking about at any given moment. Also, I just want to take a second to give a shout out to the latest members that joined overnight, this morning, last night, all that fun stuff. Thank you so much for the support. I'm pumped to have you on the SSFTG family. If you aren't a member yet, you do have a few different options available for you to check out if you are looking to further your trading education and career. Here on YouTube, you can check out the join button below the stream. YouTube family gains access to the extended trading hours room, which continues from the morning session until we end the morning, usually around like 10:30, 11 o'clock. Every member gains access to the Discord chat server, and of course, you get the awesome badge next to your name to show your support here on YouTube, and it just looks cool. To understand the day trading approach that we are using here in the room every day, look no further than the Day Trading Academy. The Day Trading Academy, listen, this isn't a small PDF by any means that you're going to be finishing in an afternoon. Okay, this is a full video course guide of 19 plus hours. And you've also got homework, reviews, study guides, etc. There's a ton of stuff, so you better tuck in if you're going to be going that route. And then of course, finally, the big Kahuna, the Mac Daddy, the VIP. VIPs have exclusive permanent access to the non-delayed stream, covering the entire morning, the morning room. That way you can ensure that you're on the fastest connection possible, and you don't miss any beats along the way. Of course, alongside that, VIPs also have access to our monthly webinars. We've got one coming up right around the corner, about a week or two, or not too much longer. That one's going to be really cool. Private VIP events, one-on-one scheduling access, all kinds of cool stuff. The list goes on and on and on. So whether you're here for the very first time or you're a seasoned VIP veteran over on the Zoom stream, welcome. I'm glad to have you trading alongside with me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, see what's going on for today. Obviously, grab your morning DP levels. Those are there for you on the Major 7. The Major 7 markets, NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. All of them waiting there for you. As far as the news is concerned, looking at the news calendar for today, today is Wednesday, so you'll notice an addition down there just to make our lives a bit easier. But first off, we've got some news at 8:30 that came out with a PPI. That forecast was 0.6%. The core PPI was 0.5%, but either way, that's the first batch of large news that we had this morning. At 10:30, we've got crude oil inventories. That's forecasted at negative 4.359 million. And if we look at the API report, that came out at negative 4. Seems like we're probably going to come out right about in line, actually, all things considered, or at least that's what it's looking like at the moment. And then at noon, we've got Fed Chair Powell testifying, which can sometimes move the markets around a little bit. But as far as the news is concerned, the only real big thing that we have anymore is crude oil inventories. And, well, that's about it. Oh, all right. Thanks, Nate, for the heads up. Gotcha. No bans. Okay. Hey, Zach, how's it going? Everybody else, welcome. Let's jump in here. Take a look at the S&P first off. See what's going on. From this perspective, I mean, you know, one thing that we've been talking about for a while here is this higher low rotation off the bottom, and with that continuation back up, they went about 1.6, good old fib numbers, nice little pullback to about 0.32, good old fib numbers, and then a continuation back up to, I was looking for an objective of 0.61 to get the fib number completion. It seems to be doing that the whole way around, but it ran into a bit of resistance at 0.58. Close enough, basically. Either way, we've got a nice 5-wave structure to the upside, and typically after that type of move, you expect to see some sideways consolidation. Now, this sideways consolidation might have started already, right? We could be in a pure sideways, like literal sideways range, which in that regard, then you'd probably be looking for the blow off above the highs. The other ones, 1.24, 1.22, so let's put this one up there as well. And that would give, disappeared on me, that would give us upside objectives around 43.94. But you can see this is a very sideways to slightly down correction that is then broken back aggressively to the upside. So all things considered, I mean, really, this is a nice little sideways consolidation, short-term correction, but everything is looking pretty good. The rotation off the lows is an L4. Typically, you see an L1 after that. That's what they did. And even if you go way up here, that was also an L1. As we continue along with the trend, we've got L1s, L1s, until finally, last night, they get the L1 trend break. And where does that L1 trend break usually go? L2. Textbook. I mean, literally textbook. It's in the course. It's chapter 8. I mean, it's right there. Unbelievable. To the tick. Quad, what is that? A quad bottom there on the L2 and rotated all the way back up to the highs. So very obviously, even though the market looks like it's a bit choppy, it's following the rules. It's doing everything that it needs to be doing in terms of showing us or demonstrating to us that the market is, you know, it's following along. The structure is clean. Definitely doesn't feel like it though. Now, we did have an L1, L1, L1 pull back into an L2 structure. That's kind of like end of story, right? That doesn't mean that it can't keep going up and up and up and up, but we might just be stuck in either another L1 trend, or we're not necessarily done with the sideways correction. The market's already made its way back up to the highs. 2-to-1 targets have obviously been filled. So this is going to be a little bit of a challenging spot up here. We'll see. Beautiful sideways, though. Upside makes a lot more sense. Still. Over on gold, finally. They're showing up to the party. Hey, hey. Now, we've already known that shift in context, if we go back first to the impulse POC, we initially had that POC, which, might have gone a little too far. Oh, my data's bugged. Fantastic. That makes it even better. Well, I'll have to go back a little bit. But we had that POC up here at 1895. It stayed up there where that moved down, but my data got a little messed up until we started rotating about right there. And when we rotated inside there, that's when the POC shifted to the downside, right before that push lower. Let me drag it forward a couple days. Hopefully that'll work. There we go. So we've got this POC that ended up hovering down at the lows, and we've now broken above it, and the market is trying to keep it going. Typically, when you have a POC shift and a continuation to the upside, when you're looking at it from the side of traders who are trapped, it's likely that these were sellers who were trying to get the rotation down. Are they still trapped? Well, they did have a chance to get out of break even. Maybe they have one more pullback to get it done again. Otherwise, though, it's pretty straightforward to the upside from here. All right, so as far as gold is concerned, I mean, one thing that we could do, if we plot this all the way forward to see if anything has changed, we know that longs got in down at the bottom. They're still in down at the bottom. So if we're looking at it from an upside projected scenario here, down to the lows, their 2-to-1 objectives might have already been hit. Oh, they got a little bit more. The upper 1830s is when we start hitting into those objectives for the bulls. Now, here's the thing, right? If we look backward, this is a big open window. There's not really much inside here to hold the market down or up. So if it wants to really cut through this, I mean, we might not find resistance until up in the 65, 70s. We'll have to wait and see, obviously, but we're getting some nice bullish momentum off of the lows now that we're breaking a little bit further up. It's still really sloppy looking, and keep in mind, we've got to zoom out to a 60-minute chart just so it looks halfway decent. When you zoom into the 15-minute, it's still pretty gross looking. There's not really a whole lot that we can work with here. Off of the lows, they've got that L4, almost L5, rotation up into an L2, into another L2, into another L2, into another L2, eventually L2. When we do get these pullbacks to go, it'll start climbing the ladder. We've got L2s, L2s, L2s. They're either going to go to an L1 next with this upside breakout, which would put support right at around 1817-ish, or they're going to go for a deeper pullback to the L3 and climb it backward, and that would be at 1792. The L2 in the middle, which you'd think would be the one that we'd want to pay the most attention to, because that's the one that's following along, that may be the case, and they follow through, but really the emphasis is going to be on the 1 to keep this going more aggressively, or the 3 to stair step back down. If they hold in the 2s, that's fine, but I'm going to have to wait for more info, because it's been hanging out there for a long time. On crude oil, good continuation back to the upside, and basically a note out of the NASDAQ book, V-bottom reversal all the way off the lows. Holy cow. Possibility of maybe that was a wedge, maybe that was a test of the -1 DP, maybe that was a test of a previous POC. I mean, who knows, right? But if we go backward a little bit and we can kind of gauge where is the POC of this whole move from the top to the bottom right before the breakout, that POC lands right here. So, I mean, it seems pretty straightforward, right? They're buying into the dip. It's continuing to go higher, and the bulls still are looking for more conviction to the upside. As far as the bullish case goes, it hasn't broken a new high yet, but it's pretty obvious that the buyers bought off of that POC, or at least close to it. It didn't actually physically test it. If we're going along with the continuation now that we've got this move off of the lows and a slightly more obvious pullback, the one before that was an L1, but now we've got an L2, and another break above the highs. They're trying to hold the 1s and get it to rotate up. So as long as we get that break higher, then, L1 trend the rest of the way. Until it doesn't, at least. But for now, inventory day, have to give it some time. On the euro, mostly sideways. Here again, we got to zoom out to a 60-minute chart just to see anything. Descending wedge has just been working its way down for quite a while now. It looks like it attempted to break above the highs. They even tried to hold it as support, which failed. And now we've broken back down to the lows, which also held as support. We've got a massive undertow going on at the lows. And, I mean, we've been talking about the bullish case for a while. But the important thing that needs to happen before the bulls have anything is the POC needs to change. Let's see if that's happened yet. Nope, not yet. So it's still stuck up there at the 22,135s. As long as that POC stays up there and the market stays down here, I have to assume that the sellers are in and they're winning. Until we see a change, we're going to have a hard time seeing these buyers kick this thing up. It's not that they won't beat TFD. They probably will, but that's a toughie. If we zoom out on Bitcoin and we look over here, we can see it did poke its head down through the lows again, 31,600s. It'd be really nice to see 30,000s in the trap underneath that. But so far, I mean, this is about as straightforward of a move as you could really ask for. I mean, the only thing that makes it funky is this little guy right there that threw the whole thing off. But we've got ourselves a almost picture-perfect wedge. If we go a little further forward, that's where we're at. So from a cyclical standpoint, we're cycling off the bottom. Sellers are likely taking targets. It would make more sense that they would want to see at least a little bit of a retrace, but it doesn't necessarily mean the down move is done. We did bounce off of, to the tick, the lows of that wedge, though. Just, throwing that out there. On Ethereum, we've got that big push underneath 2000s. They slammed all the way down to upper 1860s before rotating back up off a settlement. Very low-weighted settlement for that continuation. And one thing that does stand out pretty obviously is the potential of this being a really straightforward ABCD move. I mean, it's almost perfect. It's not quite. What is that, about like a 0.95 or something? 0.92. I mean, it's a really good ABCD correction to the downside. So for Ethereum, there is a reason why buyers will be buying down here. It's a low probability, high reward type trade. but there will be buyers down here for sure. You could also see this is somewhat of a double value pullback, although we are looking at a 15-minute chart that's been sideways for a long time. Let's jump over to the NASDAQ on the bigger picture here and see what's going on over here. Now, when it comes to NASDAQ on the bigger picture, the daily chart is, I mean, again, it's been doing what you would expect it to do. Our typical 2.3, 2.2, 1.7, and 2.3. That was the last pullback before screaming all the way back to the highs. I mean, it just keeps going up. So, I mean, realistically, eventually it won't. At some point, I don't know when that's going to be, and I can talk about it till I'm blue in the face, but I mean, really, the scenario comes down to it just keeps going up. So shorter term trends are likely going to be a bit more of our friend, because, you know, again, we're at all-time highs. It's a really awkward location to want to be trying to hold on to bigger positions. But short-term scalping, that kind of stuff, definitely a zone of interest. Over on the 60-minute chart, same thing. POC still way down there at 13,649.50. Hasn't even come back. Miles away from that one. The only one that did show up with somewhat interest with this big chunk of volume, which was defended. You know, that's something of interest, but we still haven't seen the POC change to the upside. The market's still bullish. It's still going. I have no reason to believe that it's going to stop anytime soon. Ziggy, I don't need your help placing orders. Thanks. Touch my keyboard again, I'm kicking you out of the office. Yeah. He does not like the sound of water bottles. Sorry. Don't mind me wrangling my cat over here. Over on the 15-minute chart, we've got that that continuation to the upside. We had the L2 bounce off of that V bottom low, which was absolutely perfect. You've got the L1 trend, L1 trend, L1 trend, L2 dip. Perfect. All right, fantastic. Let's keep going. We roll this back up and we can see that now we're starting to sustain L2s. The pullbacks are getting a little bit more aggressive and they're holding on a little bit longer. We're not seeing the L1 trend keep it going anymore on the NASDAQ, so seeing L2s, maybe even 3s, would make a bit more sense. Although buyers are still incredibly aggressive off of the lows. Pop that up there. All right. We'll see what the market has in store for us. As it stands, though, seems pretty strong to the upside, huh? We're right back on up to the highs. Look at yesterday's action. So here's what we were talking about yesterday. And I had a limit order on for probably 12 hours down here at the retest of the L1. And we were talking about that in the Discord chat. That was around the 20, what was it, 20, hang on. I gotta find it in chat here. 14.827.50. 14.827.50. It's right there. So I had that order sitting there forever. And it just would not make its way down there. Like, it missed it, rolled back up, looked like it was going to dive back down, and I gave up on watching it for a little while and came back to see this. So I missed the whole freaking thing to the upside because I was, I guess, greedy. for what it's worth. I was just trying to buy a pattern, but, you know, missed it. Didn't have a chance. And a lot of sellers, that's important to know. You know, I mean, obviously it's frustrating, and in talking about it, it's, you know, we can be facetious and joke about it and all that fun stuff. But that's important information too. Because I guarantee you, I'm not the only one that got missed on that boat. There's a lot of traders that got missed on that boat. We've got a serious case of FOMO working its way to the upside. We shouldn't typically be seeing an L1 trend holding when you've got an L5. L5s usually hold L2s. They're deeper, right? So the fact that we're going L1, 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 that leads us to believe that that deeper pullback is probably around the corner, right? So looking for that L2, that deeper pullback, makes a lot of sense. At the open, kind of awkward, but that's where it is. We do have a little bit of time until we go into the open here with about 7 minutes. Looking for the L2. That's the big one right now. It's the L2. Not that they won't hold an L1, and they probably will because I'll be looking for the 2, but that's what I'm looking for at the moment. deeper pullback. Now, if we zoom in a little bit closer, because we don't have a ton of candles, really. We don't have a whole lot to work with. If we go from the narrow term and we look at the rotations, we've got an L3, confusion, attempted to get a strong breakout, but buyers usually on the strong breakout, although, I mean, it didn't make it too far above some of these previous swings. L1 buyers is usually the anticipation. They didn't. What happened? They fell down to the L4. So we're climbing the ladder with this kind of rotation. We've got the L3. Now we've got an L4. Like, well, wait a minute. What's going on? Are the bulls losing steam? Are the bears gaining? Are they waiting for a breakout? We've got some confusion. The bulls tried, and they just failed. So the fact that we've got this kind of L3 to L4 backwardation, if you will, the next time we get a breakout, now we've got an L4 into a strong rotation up that has even more context. Little itty-bitty inside trap after a double bottom. And guess what? That was also not technically a double bottom. That was a trap on the lows. So we've got two major traps that are taking place and a very strong break above the highs. Actually, you can see this one right there. That might have given you the L1 if you were brave enough. It did. I mean, it's there, you know, but that's a toughie. I think there's probably a lot of traders that are looking a bit further up for the next more obvious L1, which was right here. But technically, that did hold. That might be the first one in a sequence, right? We've got L1, L1, continuing back to the upside. We've got another L1. Now we've got 3. That would have been the third one. Buyers may have bought that one. I mean, everything is telling us to expect either L1s or, more likely, a deeper pullback to an L2. So we'll kind of have to wait and see how they want to approach this at the open, because, I mean, I don't want to be a buyer way up at the top, but it really feels like we've got a severe case of FOMO coming in with all of those misses at the bottom. I would love to see it trigger above the highs and then get wrecked at the open back to the L2 just to buy into the dip. That would be probably the best scenario. Of course, you know, now that we've said it. Let's see. I'm trying to better understand open interest. Any thoughts? Open interest in the aspect of, like, just in general. Open interest in general, they're talking about the number of outstanding, in this case would be futures, so contracts, that haven't been settled. So that could be shorts, that could be longs. But that's all it means, is that it's an open position somewhere. So if I were to open a position and leave it, that would show up in the open interest as 1, right? Well, I guess it depends on how they calculate it. It might be 1 for every 100 too. That all depends. I don't look at open interest too much, but that's essentially all it means. Is it's who's still in. What's the open interest look like? What positions are still open? Primarily, the reason I don't look at open interest is because I'm constantly analyzing the volume. You know, like, as far as open interest goes, to me, open interest is more daily settlements. That's long-term stuff. I already know the market's incredibly overweight up here. So, I mean, open interest might be useful from that perspective, but we're already analyzing volume so much in here that we already know where traders are likely trapped from. Seeing the open interest doesn't give us any extra, if you kind of see what I'm saying. Not that it's not useful information, it definitely can be, but just think of it this way: it's the total number of outstanding contracts that haven't been settled. So it equals the total number of bought or sold contracts, not the total of both added together. So it's just open interest. If you're zooming out to that perspective, like pretty far out there, another thing that can be fairly interesting is the COT, the commitment of traders. The COT can give you kind of an idea of what's going on. Typically, it's more interesting when retail investors and industrial investors diverge. You know, retail buyers, they love buying the top and selling the bottom, CNBC style. Two minutes until the open? About a minute and a half. see what kind of action the market has for us, but the L2 makes a lot more sense. Got 1 minute. Is the hourly MNQ still in the hourly still in MACD divergence? Yes. Technically, the last peak high on the MACD was 38.75. The most recent one was 32.1. So, yes, it's still diverging. But it's not very strong or obvious anymore. All right, NASDAQ, let's see what you got. Going into the open right out of the gates. Expecting a deeper pullback, although FOMO will be strong. Stock exchange is open. S&P opening with an inside gap to the upside. And as far as an inside gap goes, they're opening up right at the top, the peak of where that giant drop happened. Talk about a little bit of resistance. Jeez. There's a lot of resistance up here coming into the open on the S&P. Maybe they work through it. Yikes. Just out of curiosity, too, where's the POC on that whole move? Okay, well. What about before the drop, though? Okay, so it still stayed there. 43.75 quarter. It would have been made a lot worse if the POC was up at the top. But I think this inherent bearishness out of the gates kind of makes sense given the location. There's the L1 on the NASDAQ. Really? Wow. Okay. So we're continuing the L1 trend. The next major pullback is likely going to be an L2. That's the major zone of interest, but buyers are still very obviously buying the L1. Big wicks down at the low. Triggering bears underneath on all of these little wicks right here. On faster time frames, sellers will be selling underneath them, trying to get a lower high. But all of them totally unsuccessful. They should be able to break through the top if they're holding L1s that well. Yikes, that's not going to help. Market is above the POC. Just wait till it actually pulls back before I redraw it. Very strong continuation. There's those FOMO buyers. Sound seems really low. Oh, yeah, it is. Hang on 1 second. I don't know how that happened. There we go. Is that better? It was at a negative 20 decibels. Jeez. That should be a lot better. Thanks for the heads up. I reduce the sound when I'm recording. That's probably, I probably just didn't set it back. Although I have a different channel for recording, so it shouldn't have messed with it. Whatever. Just because recording, I can be closer to the mic. I don't have to, you know. I'm not going to have those moments where I'm as excitable with crazy moves. So I can keep it a little more level. Very strong continuation back to the upside. We are seeing volume increasing. You can see it very obviously across there, so sellers are building into their positions. Currently, if they are shorts and their average is at 965, they are underwater. Thought it was a speaker problem. No, I got you. I don't have to sit as close to the mic when I'm not recording, you know? Little bitty wedge going on up here at the top. Not really a whole lot going on, though. Market just grinding. Nice little twin reversal potential trap on the lows, but it's forcing buyers to buy literally the high. So 15K is right there. Self-fulfilling prophecy, not too far around the corner. All-time highs, not too far. Yikes, that bear bar off the top. Holy crap. Ooh. Okay. First 5-minute bar on the S&P is beautiful for the bulls. Wow. Looking back on the NASDAQ, the first 5-minute candle here. Got ourselves a POC right up at the top, 85.25. Lovely. And as far as the S&P goes, we'll zoom in nice and close. We've got a first 5 POC at 82.50. Nice little pullback, nice little continuation. POC of the entire move up hanging out at 14,965. Big blow-off move to the L1. Now remember, I'm expecting one of these L1 tests to be a trap. I don't know if it's going to be this one. We've got the POC right on top of it, and it's a second long. But realistically, where we are now, context-wise, it would make a lot more sense to see an L1 fail and then the dive down to the L2. And, you know, measured move-wise, we're right about there. Starting to dig down to the lows of the L1. L2 is what I'm waiting for. Sometimes buyers do show up at the lows of the L1, not this time. POC shifting down. We haven't hit the L2, but buyers might be trying to show up a bit early here. Didn't get a fill on the L2. See if they can kind of pop through it a little bit since I didn't get a fill. That's fantastic. Wow. All right. Didn't get a fill on that bounce, but we are seeing defense there, I guess. That's frustrating. The second time around, we've got a bit more emphasis, but we're shifting underneath the POC, and we've got a pretty strong bear leg down. I'd like to see them pierce underneath the 40s if possible. Nice little double bounce off the lows, though. Swing longs, understanding that it is low probability, they might have a shot here. Shorter term options stuff, though. I mean, that might even be more beneficial for, like, Nadex. poking their head underneath the last bull bar. But closing back up as a bull. All right, sellers with a very strong bear bar to the downside trying to get something done. Being the first one to the party would mean that you would have to buy the L2 basically blind, which I tried to do and didn't get a fill. Unfortunate, because that would have been a nice little bounce there. But now we've got to wait for a bit more proof. The trend is effectively down. We're underneath all of the moving averages, even though they haven't necessarily come together. There's some problems. Bulls just tried coming in above that really strong bull bar. Do they have follow through? Little bear bar. Sellers will probably take that. It's a nice looking little setup for the shorts. Very short term, and it just bounced off the L2. So, it's got some issues. Starting to actually challenge the L2 now. Market is still under the POC, but we did retest it with a new low. Go a little further here and see what we've got going on into the first like 15 minutes. That POC is still way up at the top on the NASDAQ. Sellers continuing to grind down. Now remember what we were talking about. If the L1 doesn't hold, the L2 would be the next likely scenario here. And, well, actually that is the better scenario on the L2. From the swing perspective, they've already got it. Right? It's already hit the entry point multiple times. From the future side of things, a lot of traders will be waiting for a bit more info. Higher lows, higher highs, like moving back above a short-term moving average. Something of a bit more proof. Swings already have it long from the L2. Upside objective for them, if they were utilizing the tightest of stops, I suppose, would be back up to the top of L1. Back above the POC. Nice little bear bar attempt. Still not enough proof from the bulls. Although, if they keep taking these candles back up like that, it's going to help. Did make it up to a new high. Oh, no, they didn't. They only almost 91.50, huh? Man, does this market feel dangerous. Looking across the field here. We've got the euro catching a halfway decent bounce. Ethereum still following through pretty well. Crude hasn't broken the high, but they're back up there. Yeah, it's I've been having I've been having some issues this morning with my computer. It's running like crap. I don't know if I just had an application that's running in the background that's hanging something up, but you're definitely not alone. If your Zoom call dropped and came back, it might be a local internet thing too. But I know that I've been having slowdowns on my computer this morning. So. Do you normally just draw the POC off the first 5-minute bar on the ES, or will you draw it a few bars later? So the first 5-minute and the first 15-minute are the two major ones that I look at. The first 5-minute is the one that I talk about more often because that's the one I remember more often. But generally speaking, the first 5-minute, the first 15-minute, that's where you really get a lot of definition in terms of what the market's trying to do. Because remember where we were before, right? I just increased this now from the first 5-minute now to going on the first 15, a few seconds left. So the POC is now shifted to the downside. That's an incredible amount of information given where the market's trying to close right now. If the POC was up here, which you can see at 85.25, and now it's down here, well, now I have to ask, did the buyers just buy the dip? Are the buyers long? Or were the buyers in and now they got out? Or were these shorts that took profit? They all equal the same thing. Is this a short-term bottom? And right now, the market's demonstrating that alongside the POC. So it's not that you can't bring it further forward, but I usually stop after the first 15, unless there's already been context built in. Like it's obvious that longs are long, you can keep it going forward to see where they exit. You know, it all depends on what's happening. But generally, the first 5, the first 15, that's what I care about. Like right here is an example, the first 15 based on what we've got. That seems pretty bearish to me. Now, does it mean that the market has to fall right now? No, of course not. It could easily go screaming back up. But that tells me that I'm going to have a hard time being long while we remain underneath that. It's got to get above. If I wanted to be a short, maybe that's my signal. You know, I don't know, but... Secondary bounce off of the L2 with continuation back up. Further demonstrating that bulls are likely looking for that objective to the highs, which means that scalpers are going to be looking for a bit more follow-through. Buying high up now is a bit easier to get away with because of that retest. The swing objective for the longs who bought the L2, they're going to be looking to exit around the POC if they're not exiting already. $950s? Yeah, definitely. Getting closer to the target objective area. 10 o'clock. Around the corner, top of the hour. Next news announcement's 10:30, crude oil inventories. Forecasted to be in line at around a negative 4 million. With that mindset, looking at where crude is now, in line at negative 4 million, and the market's already kind of going sideways, that would kind of lead me to believe that we're probably going to keep going sideways. Maybe they finalize the move up to the top of the wedge. Right, that's about it. The only thing that could stand out on inventories is if we get a quick little flush with a trap underneath this low. That would be incredible. I just don't know that it's going to be able to make it to 74.05. Little micro double top there ahead of the objective, and now pulling back to retest the POC once again. Ooh, big jerk underneath it. How does the market respond? Here's another retest. Starting to chop down pretty aggressively, though, and now prices below the POC. The bulls need this to jump up fast, or we could be in store for that deeper pullback. Remember, they were climbing the ladder backward, L3, L4? Well, if they're not going to hold the 1 and 2, where do you think they're going to go next? Probably rinse and repeat, back to the 3. Maybe even back to the 4. It's a bit of a challenge for the longs. Although, I mean, they came... The target was 65, and it went up to 63. So, you know, that's one of those, like, are the longs still really actually long? Maybe some. Basically made it to the 2-to-1 target. Let's see if they grind down through, though. Nice bull bar. Looking for a short on this pop for a continuation back down with the bulls losing their grip a little bit. Beautiful flush back down. Very nice quick. It's a very quick scalp. Again, I'm trying to short into a bull market, but I love the failure under the POC, and I know the bulls are scared. They haven't broken underneath the L2 yet, and they haven't even hit the secondary portion, so I think that fear is unjustified so far, which is why I'm not staying short for very long. This could easily pop right back above the POC again. Now, if they would have gone like this, where we broke underneath that previous low with some gumption, then yeah, you know, different story. Hold on for a little bit longer. Back to the POC, although shorts may try to take this from here. I'm less interested in the short side for obvious reasons. We just don't have that excess proof yet. Nice pop back up. I'm going to look at this next pullback as an opportunity for bulls to try to pop this back higher. Shorts who tried jumping in and held a little too long are going to be in a slightly upside down position here with these bull bars continuing. Very weak bear bar, which is fantastic. Looking for the first pop up here for objectives. There we go. Nice. Snake the POC back to the upside again. Whoa, 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 whoa. Did you see the volume jump there? Holy crap. That changes things a little bit. That POC just became a mountain. that showed up out of nowhere. You have to rewind it back a little bit and watch that back. Watch the POC, how it went here. Because it would look like this. And then it went whoop and jerked way up. There's a lot of volume that changed hands there. Tough to see if you weren't watching, though. 14,950s back above the POC again. That last move down more likely to be a trap, although we are still persistently making lower lows and lower highs at this time. Oh, lordy. A bear bar closing down the way that it's looking right now, I mean, seller's going to have a real hard time not wanting to try to follow that through. It's like a little micro double bottom. Whoa. I'm glad I hit hit the ask. Jeez. I'm going to jump out of that real fast. That was a loss for me. I hit the ask when it was down at the bottom at 46.50, and when I hit ask, it filled at 50.75. I tried exiting when it jerked back down for a break even, and it jumped back up, so I took the exit at 53.50. That happened in nanoseconds. Incredibly fast. Now, the shorts who would have taken that, if they didn't jump ship quickly, which I think they should have, they're likely underwater very aggressively right now. So that means that we might not get very many pullbacks anymore. while they try to work their way up to that 2-to-1 objective for the bulls. Yeah, I got a really bad fill on that one. That was like 2 points away. More bullish continuation. Little bitty bear bar. Remember, this next rally up, this would be the second time that it's occurred, so a lot of swing traders who were long earlier aren't going to let it pull back again. It's got to hit the target or they're not going to be interested. All right, Doji's starting to get a little bit of a pullback, a little bit of a dip down here. Can they get underneath back towards the 50s? Like maybe even under 53. Yikes, what is that candle? L2 buyers are starting to try to get those higher highs, higher lows, although it's got to break 63 to actually prove it. The impulse POC, now that we know that that is proven, is hovering up here at 65. Nice little dip for buyers to pick up on this move back down again towards those 50s. Very nice dip to the 50s. Huge bear bar underneath the 50s, though. I'm not going to hang out in that. No thanks. I'll take the break even. I did not want to see that bear bar jerk down that strong. That could follow up with another bear bar of equal strength. So I would rather wait, take the break even, and re-enter if it gives me a reason to. We can tell we're in touchy territory. We haven't made the new highs yet, so it's still... Ugh. That's a heck of a bull bar. Holy crap. Tried buying the dip back, but then it closed underneath the POC, took the exit at break even. Big bull bar right back up with a giant twin reversal. The S&P is not doing a thing. The last 5-minute bar was a doji. All right. We're back up. The 2-to-1 swing traders are getting their objectives taken out. So the short-term options to the upside that we're looking to buy the L2, their targets are done. Nice trade. From the scalp perspective, they juked me out on that last one, but oh well. Thanks for the heads up on this swing. I took a modified 2-to-1 though. I mean, I don't necessarily blame you. Usually when I'm looking at these areas, if you want to increase the probability as beneficially as possible, then modifying for a 2-to-1 actual would make sense. But obviously, when you're getting into this trade and your initial risk is, 240, 250, making sure that your targets are, even with the modified, should be higher than that. And with a modified, that's at 320. So you're still over 1-to-1 on the modified 2-to-1. So I can definitely see why traders would have taken that. And that's where that dive down happened, actually. So there's nothing wrong with it. I wouldn't say that that was a wrong decision by any means, especially noting that the market went down. The entry was here. First pullback against, second pullback against. It shouldn't happen again. So modifying it, yeah, all right. For me, I would rather modify if I had multiple contracts. Like instead of taking, let's look at the micro as an example. If you took 10 contracts long in the micro, that would give you some flexibility to say, all right, you know, we've had that initial rally up. You remember over here how they were really close to the 2-to-1 target, but they didn't quite get it. When you have multiple contracts, that's where flexibility comes in handy, because you can exit 2 or 3 of them, not necessarily all of them, if you're feeling like something's wrong. And we were talking about it at the time. So I know for a fact that I would have exited some had I traded it that way, because we talked about it. Now, that's one nice thing about that, because when it pulls back again, that's the second time. Swing traders will allow a trade to pull back against them twice. It's fine. But any more than that, that's some problems. So it's got to rotate up from here. And you'll notice it never came back to break even after that. That's why. Buyers knew, and they defended it aggressively and accordingly. I wasn't expecting this washout to happen. But, you know, hindsight's kind of a B sometimes. Swing traders had a fantastic long off of that, though, for a 2-to-1. Maybe more if it keeps going. Bears continuing down. Now, put yourself in the position of the bulls. We're pulling back to their break-even point. Do you think they're going to hang out anymore? They just got a modified and an actual 2-to-1 risk objective off at the highs. I have a really hard time believing going into 10 o'clock that these longs, unless this jerks up real fast, that they're going to want to stay in this for too long. This is forcing traders to sell very, very low, and I'm going to look to grab this pop back up to the POC because I don't believe this move. To look for a rejection back down. A lot of bulls will have tried to grab that move, and this slam to the downside is likely going to have them a bit nervous. Now, this might be a secondary washout for buyers to buy into, so we'll have to kind of see how they want to play ball. I've got to keep my risk light. We're shorting against a bull trend. If they start migrating their way back up to the 6650s, then I'll look to modify the average up for an exit on the next pullback. It went too fast. I didn't get a fill. It was up there for a nanosecond. So shorts are definitely stuck, myself included. We know that. So there are a few different ways that you can approach this. Before it hits a stop area, you just exit and take the loss early, or modify it with, depending on the size. For me, I like this area for a potential trap above the highs to modify my average up just a little bit, to look for the market to try to churn its way back down again. So far, I've only had a chance to do the 3, so I don't really have much else of an option. If I'm able to get more, though, then we can look at a more profitable scenario than just a break even. We are going into 10 o'clock as well, so feel free to get those questions in. We'll get those covered for you. As far as the continuation to the upside goes for expectation, we've got an L5 to the tick. So the next inevitable pullback will likely be an L2, which is where my average is, so that's fine. But as the market increases in price, I'm going to have to do a bit more work to ensure that my average is in the right place. Big pop to the upside. Next zone of interest doesn't really spark until like the 8150s. Again, I'm trying to keep my risk as light as possible given the current context of the market. Doesn't make any sense to go in too aggressively. I like that. Rifle up, though. Right back to the 5-minute POC. Looking at the breakout above the highs now that we do have the L5 and the continuation up, my entry is still right inside the L2. So as far as escape routes, it's still totally manageable, right where it needs to be. Nice pop back up. Again, we already know that shorts are stuck, and that's why I'm treading ground so carefully. Because when shorts are stuck, they tend to do things in a really stupid way. Like scale in way too fast, way too aggressively, and create an unsustainable position for themselves. It's super easy to just slap the sell button over and over and over again until you realize, wait a minute, I'm out of margin. Like, wait. So what I like calling it is rocking the boat. When I'm looking to go both ways, like here, now my average position size when I'm building in, I usually like to keep around 5. Now I've got 6. So I've got a little bit of leeway if it starts coming back down towards around where my original earlier entries were, back even in the 85s. That would allow traders to exit a little bit, draw their average up in a more favorable location, taking a loss initially, while still looking for the larger pullback down to the L2. It creates a scenario where it's still favorable. It's all about the management. Nice continuation down. This still has a very good likelihood of continuing back up to the highs, which is why I'm reducing in these logical points of interest around an L1 back at the L2. Those will be zones of interest. We did make a new high briefly. But we are after 10 o'clock. I'm not seeing any questions coming in on that side, so let's switch gears over to the extended side, and then we'll keep this one going, all right? So for those of you on the YouTube end of things, if I missed any questions, feel free to shoot me an email. I'll get those covered for you from there. Otherwise, though, looking for a downside objective. If it just, because the volume is so aggressive, if it just rifles through the low, we might have that L3 pullback after a new high. But at the moment, I'm looking for, closer around this break-even point, back down to the L2, maybe even down to like the 73s in that area. But that'll do it, all right? Enjoy the rest of the day. I hope you had a great day of trading. And if I miss any questions, feel free to shoot me an email, jhb@ssftg.com, and we'll go from there. So have a great rest of your day. Rest up, and we'll see you all tomorrow morning. For the rest of you, just listen to me babble to myself for a minute, and then we'll jump over to the extended session. So we'll talk to y'all later, all right? Thanks.